Hello, everybody. Welcome to a wonderful episode. Quick housekeeping. Your boy is still working on what he's going to do with the podcast. I'm thinking of December 31st of 2022. I'm going to take a good chunk of the show private and make it Patreon exclusive only for the low price of 15 cents a day or about $4.50 a month. Pretty much buy your boy, buy me a coffee. You can have all the podcasting experiences you ever need. And I'm also working on collaborating with people. So integrating you all and everything. Quick note on our guest, Shauna. Shauna was absolutely fantastic. She gave me so many tax advice, tips and tricks. Just a little context beforehand. We were talking about different things, and at a certain point, I just said, "Oh, I need to turn this on, or I'm going to forget to record the whole thing." And so, if it seems a little choppy, it's just because I'm 2 minutes in. I'm like, "Oh shoot, hang on, let me hit this button." So, other than that, we get into some awesome stuff. I highly recommend you check her YouTube out because the same energy she brought to the show is the same energy she presents on YouTube, and it's just fun to watch her too. All right, let's get right into this.
Welcome to the Josh Bolton Show, where we dive into interesting and inspiring conversations. And now, your host, Josh Bolton.
Thank you so much. I appreciate it. Yes, sorry, my brain, I just had to shift my brain there for a second. Yes, we have quite a few clients that are SaaS services, right? And so we do have internal to tax guys. We do have one person that specifically works on anything sales tax or anything like that. But generally, I suppose it depends on what you mean. Do you mean we need to research it? Do you already have it? You just need it prepared? What?
It would. Because I've been building out my coaching and all that. Awesome. My biggest hiccup has been sales tax. And I'm I don't want to sell something in Canada because I know in 3 years, the Canadian tax guy is going to come knocking you owe us $100. Shit, I do.
Plus $1,000 in penalties. Yeah. So the first place to go, let's back up. If you haven't already done that, then the first thing to do is going to be to reach out to, they're called Nexus studies. And what they do is they look at where are you selling, what are you selling, and they look at it from both perspectives, but the income tax side and the sales tax side. So what they'll do is they'll ask you a bunch of data, they'll look at all of the things, and then they'll say, okay, great. Yes, you need to file. No, you don't. This is why you need to file. This is what you need to do. This, that, whatever. Mm-hmm. So it just kind of depends on whatever the Nexus study people say.
Okay. So then, yeah, it would definitely either, because I think QuickBooks has an option for that, but I've also gotten mixed reviews on that. They're it works sort of at times if you do it right.
That's a great description. Yes. And let me back up. I think there's two different pieces to it because there's, what do I need to do, which is what the Nexus study people tell you, right? And then there's how to actually get it done, which QuickBooks would be how you do it. Or a lot of people use TaxJar or Avalara to track all their sales. They're built for that. And that's what they're supposed to do. But with all of those, QuickBooks, TaxJar, Avalara, you have to know what are you supposed to do because you have to input it into the system. I want to collect sales tax here, but not here. So you have to know that's where the Nexus people come in. Okay. So pay them their $1,000, whatever fee, get all the information. I think they normally start at $2,000. They're good. But the deal is they're going to ask you, typically what we do, there's a 30-minute telephone call right off the bat, and they kind of ask you some basics because they've done, this is what they do, right? So they can get on the phone and be yes, you need to, or oh my God, you're in so much trouble, or, whatever, right? And then they'll tell you yes, we need to perform an actual Nexus study. The smallest I've ever seen them charge is $2,000. The largest, all 50 states, millions and millions and millions of dollars is $50,000. So it's going to be somewhere between 2 to 50. I wish I could give you a better answer to that, but
no, yeah. It's good. Yeah, that's where predominantly most of my clients are going to be in California. So the out of state thing, I'm not too worried about. But it's when I get to that point, I don't want to have this awkward conversation. Well, it wouldn't be awkward. I just call you and be all right, so what am I supposed to do again?
What am I doing? Well, and side note, my suggestion would be reach out to them. And so Celine, I think you've been working with one of my two assistants, either Celine or Mark, maybe in emails.
I think it's Mark. Yeah.
Things. Mark. Okay. So just ask him for the information for the Nexus study people, NEXUS. He'll give you their contact information. I would recommend that you call them now, because we have had cases where people are like, oh no, I think I'm totally fine. And then 3 years later, oh, I'm so not fine. And now there's like big things. So I'd rather talk to them in advance. If they say you're fine, great, then don't worry about it. So.
Yeah. Well, that's where I had a client earlier this year. He was paying me, but it was like one of those, I told him, it sounds really janky. Pay me through Patreon and I'll make a special tier for you, because then they collect everything and pay everything for me.
And there we go. I love it. Smart.
So I made a good chunk off him, and then we just separated our ways. But yeah, I was like, it sounds really janky, but I don't want to get a random call from North Carolina going, you owe us money, boy. I'm like, uh-oh.
Yeah, especially with that boy on the end. That's still scary. But yes, yeah. I mean, the general commentary for income tax and sales tax, generally you have to have $100,000 worth of revenue in any given state. Right. But that's not true for all the states. Some states, you sell a single dollar, you report sales tax. So I
was just going to say Nebraska's like, you sold 99 cents. We want 30% of that.
Exactly. So.
Yeah.
Cool.
Okay, cool. Then it's exactly what I was thinking, because I've been looking at Tax and Avalara or whatever it's called.
They're more they produce the reports you need to file versus what you need to know first is, well, where am I supposed to file? Right. That's where you need to. Yeah. So that's the Nexus study.
Cool. So the other one for you, I've been asking, thinking about, especially listening to yours, because I was really inspired by your one client, California, that like legally owed nothing.
Yes, so, it's my favorite news to deliver every day. It
is. I was like, in California, no taxes. Wait a minute, I need to talk to her.
Yes, it's good stuff. Well, yeah. So that's our strategic tax coaching program, right? So what we do is we look at somebody's total revenue. What kind of expenses do you currently have? So gross revenue, total current expenses. What are you netting at the moment? And then we look at, well, what changes can we make? Right. And so there are some changes that are really super easy changes, just nobody ever told you to do it that way, so you never did. And then there are some changes that are super complex, but typically, not always, typically the super complex strategies also take a long time and cost a lot of money. So it just depends on how much tax we're trying to get rid of. So.
Yeah, that was one of them. I was chatting with a guest, and he was saying, he's like, if you have enough money, you can make any problem go away. And he's like,
exactly.
He's like, including taxes, but he's like, at times you might be spending more than you're saving. But he's like, but that's the game.
I agree. If my only caveat to that is you're spending more than you're saving if you do it wrong. Right. So I'm a big fan. Every strategy we give people is at minimum of 3 times ROI. So, if it's going to cost you $1,000, it's going to save you at least 3 minimum, right? I tend to shoot for more 7, 8, 9, 10 if I can. But yeah, so.
Wonderful. So then what were some of the strategies, without like getting too intimate, about that one client in California that you helped he or she with?
Ooh, that's a great question. We have so many zeros in California that I'm like, which client were we talking about? I don't remember.
Generally speaking.
Yeah, some of the big ones, especially when you get into bigger dollars, right? Because most people call somebody like me when they're paying tax on a minimum of $250,000 a year, right?
Okay.
So now we're looking at things like a captive insurance company is one of them. If you have kids, paying your kids and how to do that properly, like get the income out of your name. If you own your house versus renting your house, you can use the master's exemption. So it really, tax strategies are so funny that way because they're very, very specific and customized, right? So for example, like I'm single, well, I can't, and I don't have any kids, so I can't pay the kid. I can't do the pay the kid, pay the husband thing, right?
Right.
But I do own a house, so I can do the house thing. So it's just very dependent on what somebody has. Captive insurance, for example, you have to be making gross income of $750,000 or more to qualify for that. Oil and gas is a big one, especially with the people out in California, but you've got to be an accredited investor, meaning you have to have $2 million in assets outside of the value of your home. So it's every single strategy is just so dependent on the person that we're talking to. So
up and coming service coach, kind of.
Okay.
How about just like a coach?
Well, give me a little bit of background here, because that'll help me versus
Perfect.
like, I mean, that's a huge subject. So Are you married, kids?
Single, no kids. Don't own my own place yet.
Okay. Renting. Okay.
I do own my car, if that makes a difference.
Helps. Okay.
Okay. I work a normal 9-to-5 W-2 work.
Okay.
Under 30K.
Under 30K. Okay.
And anything else in particular I'm missing? I host a podcast on the side.
How much money do you make from the business side of it, not the W-2 side?
Nothing. I want to say even on Patreon, like I barely just hit the $600.
Okay. Okay. Well, I mean, The good bit is, right, a single dollar of revenue means to the IRS that you are now in business. Okay.
Ooh.
Yeah.
Okay.
So even if it's $5.99 or like whatever, right, at least you have revenue, because you're trying, you're focusing. Like in the eyes of the IRS, there's the difference between a hobby and a business is that a hobby is something you're doing for fun, right? A business is something you're trying to do for profit. Now, trying is a big key word there, because just because you're trying to make a profit doesn't mean you actually make a profit in the first or second or third or fourth or fifth year, right? So yeah, there's a piece there. So you're obviously trying to make a profit because you have a Patreon, you're trying to make money, right? Like we're trying to do those kinds of things. So what I would look at in your situation is probably the accountable plan. And I think we actually have that on our website. Hold on, give me a second. It's going to take a second for it to come up. Sorry.
It's okay.
Under client tools. Yeah, Tax Goddess client tools. Accountable plan, is it here? It's not here. If you'd like, ask Mark to send you a copy of the accountable plan document. There's two documents that you need. One is the actual plan itself. And one of them, we've created kind of like a spreadsheet to help you track it kind of thing. But the accountable plan basically, and do you have an LLC? Sorry, I should have that.
No, that was going to be my next question. It's mainly the address part, because I live with my parents currently.
Okay.
For me, single part-time job in California, it's hard to move out on your own.
Yeah, no.
But I don't want to form an LLC, put it in their house, and screw them up tax-wise too.
Okay. Well, the good bit is, side note, cut that from your brain. That has nothing to do with each other. So it's totally okay. You can have multiple people living in the same house and you can use that as the address. It won't impact them 1.5 dozen of nothing. Right. So you're good. Yeah. But California does have a minimum $800 tax on any LLC. They have it on a small business anyway. So the instant you report a business, whether you have the LLC or not, you're going to pay the $800 minimum tax. So the only reason I asked about the LLC is having an actual, when it's just you, right, as a person, there are certain tax strategies that you cannot take advantage of because it's you and you don't have you versus the business, right? Yeah. So, but you don't own the house. Just running through. How are you health-wise? Pretty good?
Really good, actually.
Really good?
I would say, other than working night shift and a little extra pounds from that, but doing fantastic.
The joy. Yeah. Okay. So then there's a medical thing for people that are not doing well. So you won't need that. So, yeah, I would say start with the accountable plan, because the accountable plan is going to help you track use of your space. So with your parents, do you pay them rent or do you get to live there for free?
I do pay them rent, but it's more, it's not anything significant. I think like $300.
That's okay. As long as you're physically paying something, then that's okay. So yeah, the accountable plan, basically what the accountable plan does is it helps you track a percentage of home, right? So like the 5 feet or whatever that you're sitting in, the 6x3 or whatever for your desk.
Yeah, like 4 by 5.
Your cabinet. Exactly. Those things are all going to be a percentage of home office for you, right? So I realize you're paying $300 a month. So let's say your square footage there is 25% of the room that you're in. Okay. I don't know.
I don't know either. We'll go with that.
We'll go with that for purposes of example. So if it's $3,600 a year for rent total, right? 25% of that is going to be a business expense. So 25% of your rent, if you have to pay utilities, obviously any equipment like your microphone or anything you buy, a portion of your cell phone if you're driving anywhere. If you're ever meeting like a vendor or a partner or something like that, if you're driving anywhere, the accountable plan would track your mileage, be able to get you deductions for that. What else? Yeah, I think the biggest thing at your size at the moment is to always keep your mind open to what things are ordinary and necessary for you to do your job, right? For you to be able to earn revenue. So, for example, your microphone's the easy one, right? Without the microphone, you can't do what you're doing, right? Headsets. But sometimes that even comes into, so for example, if you're ever doing your podcast on camera, right? If you decided to get logoed shirts with your logo on it, the shirts would also be deductible, right? Because this is now advertising marketing, right? It's a long story. I had a client forever and ever and ever ago. I told him that, and he came back like 2 months later and he said, great, underwear, socks, shorts, t-shirts, like he logoed everything. And I'm like, okay, well, I mean, you did what you were supposed to do. So not quite what the IRS means, but yes, that's fine. So yeah.
It's like, I can save money. All right, my brand's on everything.
Let's do it. Everything. Yeah.
I'll even wrap my car.
He even said, he's like, do you want to see? I'm like, that. I believe you. We're good. I believe you. It was awfully cute. Let's see. What else is a Schedule C? I think those are the big things. The accountable plan, keep your mind open for ordinary and necessary. Because a lot of people, they just don't. You've always paid it personally. And so you just continue to pay it personally. But if it's really for the business, I would set up a separate checking account. Even if you don't have the LLC, have a separate checking account and track everything in and out of that.
There's one I actually, at the credit union my mom used to work at. Yeah. I had a separate one for a personal line of credit to help buy the current car I have, but I never used it. I was like, you know what? That'll be my business account.
Perfect. I love it. Yeah. And just make sure that any of your earned money in or money going out. So this happens often, right? Where you get somebody, for example, you earned your $600 on Patreon, right? But you need to buy a new microphone. And the microphone is $700, right? So you have to put in money into that bank account. Like personally, you have to put money into the bank account to go do something for business. Do that, right? So it's okay to put money into it. Just make sure you're tracking it, that this is not revenue. This is an owner's loan, right?
Yeah.
So at some point you want to get paid back. So.
Right. That's what I've been doing with QuickBooks, saying owner's investment, this and that. Like,
perfect.
I have my podcast and website hosting. The one I just thought of, I'm like, necessary and needed for the business. I'm like, I just paid like almost $800 in software for editing.
Yeah.
And I did put it on that account, but I'm sitting there going like, shh, that would be way over my proportions. Let's say I earned 600. That's $2,000 I dumped in though.
Totally okay. Okay. Yep. No problem. You can absolutely spend more than you make. And that's very standard, especially for the first year or two, sometimes even 3 in a business, right? Is that, you're doing a lot of investing to get this thing off the ground. And then at some point, okay, well, now all that investment is paying off and now you're getting paid. So that's the IRS kind of looks at that as very standard. So,
okay, cool. I would say, especially you're mentioning of the 86,200 and something hires. I'm sitting here going, you said it's small business. I'm like, I don't think it's for small business. I think it's for crypto personally, is why they're hiring so many people.
Well, no doubt in my mind, but I think they're going to be looking at everything.
Everything.
Because they got to keep 87,000 people busy. And we're already seeing it. We've now had 2 clients had agents come and knock on their door saying, okay, we want this, we want this, we want this. So, yep.
Yeah, it's going to be pretty common. What do you think for the next 2 years, 2-3 years?
5 at least.
5, geez.
Yeah.
Okay.
Yeah. Because normally they're going at least 3 years backwards and then they'll do 3 years of catch up and then they're moving forward. So, yeah.
Oh yeah. It'll be interesting.
Very excited.
Plenty of business for you.
Well, and I was going to say, best thing that you can do, keep your eyes open. Make sure you're keeping your receipts. Like take a screenshot of photo. If you have your receipt, like take a photo of it. So
yeah, a lot of mine's online, so I do just take a screenshot of it and then upload it.
Perfect. And you're good.
Cool.
You're good.
Awesome. Then I guess the other questions would be, what are some strategies, especially with real estate, that you recommend for your clients?
Real estate, can you give me more detail? Real estate for what?
We'll go with a first-time buy.
Okay. On a personal home or on a rental property?
Personal, intended to rent later.
Okay. Personal, intended to rent later. Okay. So, of course, keep all your receipts,
Yes.
everything, every penny. If you buy a plant for the front porch, keep that receipt, keep that dollar amount, especially if it's going to be a rental later. Depending on how you look as a borrower and what the interest rates are when you borrow, generally I'm a big fan of leveraging, right? So borrow as much as you can, as long as, of course, you can afford the payments and those kinds of things, right? Mm-hmm. So what else? On the personal side, if you can designate a space for home office. So for example, like if it's a 2-bedroom home, have 1 bedroom that is the office and no spare bed, nothing like that, like have it as an office, at least in all the pictures that you have.
Right.
Have it as an office. And then, let's see what else. I mean, as a primary home, that's about it. Now, once you own your primary home, you can use the master's exemption, right? So you can pay rents between your business and yourself if you're hosting events at your home. So that's when you get there, master's exemption is one of the things you want to look at for sure. And then when you convert it to a rental property, I suppose it depends on the total purchase price of the home. What's the purchase price estimated?
Around here in California, minimum is $400K.
$400K. Okay. All right. So yeah, you'd be looking at something called a cost segregation study as well then. But that would be when you convert it to a rental. That'll help offset any rental income that you get from it. So,
okay.
Are you looking at a duplex or? Yeah.
Well, that's where you actually helped me with the LLC part because I do martial arts on the side. The martial arts, the ultimate. And my instructor really wants to get in real estate, but he's like, I don't know how to do this. I'm like, what's funny is I know how to do it. And I know most of the tax advantages. I just don't have the LLC for you to give me money for.
And there we go. Yeah. And you definitely, especially if you're going to be working with a partner, like, your master, for example, you definitely want to have an LLC. With the LLC, then you want to have a really strong operating agreement. So, yes. And that's, yes, because, everything is fabulous when everybody's in love, and heaven forbid somebody gets upset. Now there's an argument. So.
Yeah. And then that's the biggest one. So I've been eyeing this one. It's 2 duplexes, quadplex.
Quadplex. Great. Okay. For 4plex, I think.
Yeah. 4plex. And I've been eyeing it. It's about $1 million for it all. And I was like, that's great. I don't have $1 million, but I know all these like very wealthy income people that want to invest do. And as I've talked to different real estate guys, they're like, yeah, you just give them a 1099 and a K1. They're like, it's not hard. The only tricky part with K1s is they don't always come on time.
Well, yeah. So the first, if it's a true partnership, so there's different ways to do this, right?
Oh, okay.
Because yeah, absolutely. So you can, okay, so let's back up. The 2 primary ways. Typically, either you own the thing, right? You own it 100%, and you've gotten loans from people, right? So you personally and your entity would have loans back to these investors, really, right? Right. The other way to do it is you and 1, 2, 3, however many investors are becoming partners in a partnership. And then everybody gets a K1 at the end of the year, right? And so it's normally the deadline is 3/15, but most partnerships extend to 9/15, which is the deadline we're working on right now, right here in 6 days. So, and depending on how you form that agreement, right? There might be a K1, there might not be a K1. But either way, typically what's happening is one person's coming in with the experience, the know-how, I know how to do this, I can manage it, I can run it or whatever. Mm-hmm. And the other person tends to come in with cash. And so that would just be in the operating agreement as to what happens, how do they get paid back? Is there a plan for sale? Those kinds of things.
Okay. So then the loan one would it just be a 1099 for them? Or it would just be...
because it would be interest typically, right? So if you and I got into a partnership and you own it, but I'm the bank, right? I gave you $1 million to go buy this thing. I'm going to want interest on that, right? So you're going to have to pay me interest every year. There'd be a 1099.
Okay.
Yeah.
And yeah, that'll be one I'll definitely pitch them, because a lot of them like my ideas. They're like, that's great. Because I was like, I'm young. I can go run and operate everything. Because there's a few businesses. I'm like, it's great, but like me specifically, I can't go get a loan for it because the bank's gonna be like, "That's cute, kid." But
you make $30,000, honey. No.
Yeah.
Yeah.
So,
yeah, absolutely. Yeah. And so the other thing that I would do is go talk to your lender first, right? And say, listen, this is the deal I'm trying to put together. What do you, lender, need to see for me to be able to buy this property? Because the lender is really, I mean, unless you're getting a straight up loan from somebody, right? So somebody could hand you, like one of your investors could hand you $1 million, but one of your investors might also say, well, listen, I'm only going to give you $200,000. You have to get the other $800,000 from the bank. So
use this as a down payment to get the other stuff kind of thing.
Exactly. Yeah. So it depends on the deal that you decide to run with your investors.
Okay. And then would the next question for you is, you definitely would know this, is let's say I get multiple properties, especially in California. Should I segment them in separate LLCs for each, or and then put a holding company on that?
You get a master at the top. So yeah, again, depending on whether you have partners or investors, but either way, you have a master at the top. Typically, any partners or investors would be either at the master, or you might end up with, this house has this investor, but this house has that investor, right? So you might have partners at the master level, or you might be the only one at the master level and you have different partners at different properties. So, but yes, that's the structure.
That's what I was thinking. Because so would that just be a holding LLC, or would that be an actual corp that's not public?
It's probably still going to be an LLC. It's pretty rare that you would ever hold real estate of any kind in a corp.
That's true.
It might happen, but yeah, my instantaneous gut would be it's an LLC. And then, yeah, everything flows from there. So.
And then I would say from that, then let's say just a hypothetical quick, you still owe taxes, but let's say my personal LLC owns whatever property. I sell it to the holding one for $1, so we can own it. Or would I have to charge the actual amount for the house?
Yeah, it's all accounting gobbledygook would be the point. It's a capital contribution into the main partnership. So normally you're not changing any dollar figures. It kind of depends on the deal. So, but normally you're not.
That's definitely when I would just call you and be like, all right, what am I supposed to do?
Yes. If you decide you're going to start getting into partners and investors and we need partnerships and all the rest of it, that's when you call me.
Definitely. It's just sit here and be like, I'm not sure what to do, but she's definitely knows.
Definitely. You got it for sure.
This is awesome. So then, because I know for like tax reasons, the IRS loves it when you take out loans, especially for business. Although that might just be secondhand. Am I too wrong on that?
I think, in general, loans are a good thing. Loans aren't taxable, right? So I don't know that the IRS really necessarily cares because they're not getting any revenue on a loan, right? They'd much rather you just make the money and pay them. But it's much more beneficial typically to the owner because you've got protection. Now you have a lender that you have to pay. So if somebody's trying to steal the property, the lender can get involved and say, that's my money. You can't have it. There's all sorts of things with lending, but that's more on the legal side, I would say. So.
Okay. Yeah. Cause that was the biggest one I've been telling people. They're like, oh, like this and that. Why do the rich stay rich and they have all this stuff, but they get paid pennies? I'm like, they get paid in stock. They go to a place like B of A and say, hey, I'll let you lend you 12 billion of my stock for like whatever amount. And that loan is tax-free.
Collateral, baby. Yes, exactly. Yep.
And then they all just look at me. I'm like, yeah, it's one of those, it sucks. Everyone wants to ruin corporations, but it's super beneficial.
I was going to say you can if you want to, but you might as well move to a different country. It's not going to happen here. So.
What, ruin the corporations?
Yeah. Well, that's a whole discussion, I'm sure. But in my opinion, the corporations run the country, not the politicians. So
they do.
Yeah. So anyway,
it's so funny because I have my Roth IRA. That was another one I forgot to mention earlier.
Yeah.
And I now you can't predict the stock market. So what I do is I look at what Nancy Pelosi's buying, and everyone's like, "Why are you doing that?" I'm like, "She's the queen of insider trading, and she can't get in trouble." So I just buy whatever she buys.
Yay!
I've actually made a lot of money too. And it's just one of those, they're like, careful, the FBI and FTC are coming for you. I'm like, do you even know who the FTC is?
You have a phone. They're listening to everything you're saying anyway. So.
Right.
Look at it. Well, what else? I'm so sorry. What else can I do to help you today?
Oh my God. This has just been super helpful. I just came right out of the gate. can you give us a little about yourself and your upcoming story?
Oh, gracious. Yes. Well, let's see. I'm super excited. I kind of wish I had it here with me at the moment, but so we have a new book coming out, The 6% Life. It should be released January, February next year, which is awesome. Goes over the top 7 strategies that we're using to reduce our clients' taxes to 6% or less, which is the whole point. So super excited about that. And otherwise, at the moment, it's high focus on tax deadlines and just making sure we're getting everybody filed and T's crossed and I's dotted and make sure everything's covered. So perfect.
I'm just curious, what's got you started on this whole path? Well, I had to say my own mic.
Well, two things, right? The main one, okay, I was young, sitting at the kitchen table. My mom got an IRS notice, and my mom is a very stoic, normally very composed, elegant kind of lady. And she literally pushed back from the table, chair went flying backwards. And, come to find out, the IRS, she had paid everything she was supposed to pay. IRS said they wanted more, turned into a whole thing. And her advisors, her CPAs and her financial people had nothing to do. They couldn't help her. They literally said, there's nothing else we can do. You're stuck. And it really just, my mom is my hero and my queen. And so when I look, my goddess. And so when I saw that, I said, has to be something else. And there's hundreds of strategies that, they never applied to her. And so it wasn't until I was able to learn the strategies that then I could apply to her. And so now she's at the 6% Life, which is great. And so that's how the start began. So
that's awesome. So then it was a very tragic event, but it was ultimately the catalyst that got you to go there correctly.
You got it. Yeah. If mama ain't happy, nobody's happy, right? So
yes.
Always keep mama happy. So yes.
So then was it like maybe junior high or high school when you were like, it made sense. Like maybe you had like a bookkeeping job on the side and you're like, this is what I want to do.
Well, I actually started off in astrophysics of all things. So I was already in college. Yeah, I was already in college going down the astrophysics path when this all happened. And so switched my major, switched to accounting finance, went to tax, started specifically in tax, all the good bits to meet this goal and ended up here being, top 1% in the country for what I do. So
that's awesome. That is, I'm sure there are so many people that you've helped that you don't even realize through the indirect effect.
I hope so. I really do. I'm a huge fan of, our people in the US having their money and not the government. I feel like individuals can do more with their money, whether that's build a business or charity or whatever it is that they want to do, better than our government can. So
I 100% agree with that one. I'm just curious do you help with nonprofit also?
We do not. We do not. We do have. So what I have learned over the years is it's much better to do what you are specifically good at, right? So my specialty is for-profit companies. Yeah. So the nonprofits have an entirely different set of tax rules and entirely separate codes. So we do have people that we can refer people to if they're working with a nonprofit, but yeah, we don't do it ourselves. So.
Perfect. Yeah, that's one I've heard. I had a tax guy come on. He was specifically agriculture real estate taxes.
Yep.
And I was like, that is very specific. He's like, there are so many BS rules in there that can be used. He's like, but if you're just a normal CPA, he's like, you will not understand it.
Yep. Yeah. Well, and that happens in every industry, so earlier you were talking about real estate. About 40% of my practice is real estate. So from that end, we know all the little ins and outs and the rules that you can use. But yeah, it's absolutely true. Industries specific have some very strange and crazy rules. So
I didn't know that's one of them. I asked him, like, okay, what is it? Because he's in Jersey, and he's like, so if your farm has X amount of manure and you can't get rid of it per whatever amount of time there, you can just write off X%. And I'm like, so you just intentionally let your cattle and just leave your cow poop in the corner? He's like,
yeah,
I never said that directly, but.
And there you go.
And I was like, man, I should be a farmer in Jersey.
Everything's got its ups and its downs, and there we go. It's pros and cons.
So. Oh, and he's like, farmers, this sounds like they have a good life. He's like, they barely get by. That's why they have so many tax advantages.
Yeah.
But it was just more a joke. I'm just curious for you then, especially with the new markets coming out like marijuana and all that. Is there anything? Well, I know it's illegal on the whole federal level, but is there any strategies maybe an up and coming person could use for that?
Oh, that's a great question. I'll tell you, it's not an area I specialize in, right? So,
okay.
We do at the federal level, I guess in a way, let me back up. So the strategies that we use are used by any type of company. Doesn't matter. Doesn't matter
Right.
if you're in marijuana, doesn't matter if you're in real estate, doesn't matter if you're a farmer, period. The strategies we use go across every industry, right? So especially with marijuana, of course, the federal government wants you to report all of your income, but they're saying that you're not allowed to take a lot of your expenses, right? And so their net profit is significantly higher at the federal level. So their taxes, of course, are higher at the federal level. So,
right.
Because whether it's illegal or not, you still have to report it. That's the whole Al Capone thing, right? You better report every dollar you make, whether it's illegal or not. That's how they captured him. So, so really when you're looking at it from that standpoint, when you're looking at tax strategy based on revenue or based on super high net profit, a strategy is a strategy is a strategy. You can still use it. It's still valid. It really doesn't make a whole lot of difference from one side to the other side. So,
okay, cool. Yeah, because I know there's a few companies that are publicly traded that sell it, and I'm sitting here going, there's got to be something where the feds are not coming in raiding their place, but there must be some tax advantage or disadvantage going on right now.
Well, I think that's the deal, right? So let's back up. We're talking about two completely different arms of government, right? The IRS entire job is to say, if you make $1, we get a percentage of it. That's their job, right? They don't really care what you're making your money at, right? It's Al Capone. The only reason he got caught was because he didn't report the dollars, not because of what he was selling at the time, right? Mm-hmm. So as long as you, from the IRS, from my perspective, from the IRS's, viewpoint, right? It's as long as you're reporting all your income, you are good. So with the IRS, I don't know about any of the other agencies, right? Totally different thing. Yes, exactly.
But I want to say one of those, I remember watching an old cartoon when I was younger. Now as an adult, it's especially true. It was the old Joker and Batman cartoon. And Joker's literally just burning the money. And they're like, what are you doing? He's like, I'll take on bats and even die with bats. I ain't taking on the IRS.
Yep. And that's the deal. The IRS, I think that's the biggest thing is people ask, how do I not report income? You don't. Report all the income and then find legal strategies to get, to lower the amount of income you're reporting. But report it, they're going to find it. So report it. So
right. And the biggest one, a lot of people have, I was in a mastermind, but my Thursdays got too busy, so I had to leave it.
Yeah.
And he was, the accountant there told me, she's like, oh, this mastermind's a write-off, by the way. It's a business expense. It's a coach. She's like, at least 70%, maybe 100% you can write off. She's like, don't quote me too hard, but no, more than 50% can be written off.
I believe it. Absolutely. A mastermind is generally education. So
right.
I don't know why the education would not be a tax deduction. There are some weird things with education. If you're being educated to do an entirely new task, then normally, if you're going to switch jobs, normally that education can't be written off. But if you're being educated to get better at what you're doing, mm-hmm. the IRS normally has no problems with that. So,
well, and that's the one she told me. She's like, also, if you read books, especially if it's through Amazon, they send you good receipts, you can write that off too. And I was like, oh, I feel like I've read so many books right now. That would have been nice to know last year.
Yeah, anything ordinary and necessary, right? If think about it, ordinary and necessary is for you to be able to make more money so that the government gets a bigger cut, right? So if you reading a book makes you smarter, gets you a bigger cut, gets the government a bigger cut of the money that you made because now you're smarter, right? Generally, they don't have any problems with that. So.
Okay, cool. So then, then I would say now everything's adding up. You are definitely a tax goddess at this.
Oh, you are too sweet. You are too sweet.
Thank you. Is there anything in specific I have missed that you would like to talk about?
Ooh, gracious. The only thing coming to mind is don't call your tax goddess on September 9th for 2021 tax returns. Planning ahead. Planning ahead is probably one of the most important things that you can do. Really making sure that, at this point, for example, for 2022, you have, let's call it 3 months, 2 months and 3 weeks left in this year to actually do anything, to actually accomplish or make any changes or do whatever you're going to do for 2022. So if you are making money and you're nervous now about the amount of money that you've made, reach out to your tax strategist, tax goddess, reach out to your tax CPA, start asking these questions now. I mean, you're asking great questions now, which is good. Because if you wait until the last minute, I think one of my favorite stories, I had a client call me December 31st, like 4:00 in the afternoon. I already had my champagne, right? I'm like, it's New Year's Eve. I'm done. They're calling saying, okay, we're ready. Let's go. I'm like, I'll give you tax advice, but I'm on the bubbly, right? So I don't think it's smart for you to take it right now. So pre-planning is one of the most important things you can do as a business owner.
100%. And that's the biggest one I've learned talking to awesome people, especially you right now, is just plan ahead and just know the strategy when you're going into it. And because like this year, I'll go to my CPA again. I'm probably gonna have to go to you next year, the year afterwards, because I'll be like, if we're calling you up, hopefully you're not on the bubbly. Be like, all right, I've made like $500,000. What am I supposed to do now?
What? Yes. So call me in May.
Yes.
Much better. Lots of time to plan. All the good bits. So
hypothetical. This I do futures trading. By the way, I should have mentioned that earlier, but. And I've taken a $3,000. Well, I'm technically going to take a $4,000 loss because everything's not going the way I expected it to. But that was when the lady told me, my CPA, and I just want to double check with you. She said, you can write up to $3,000, both stock market and whatever industry. But she said, futures contracts and options are taxed extremely different than everything else.
True. Yeah. So yeah, it's a huge question, actually. The first thing is you have to know whether it is in fact realized or not realized, right? So, because with futures contracts, you have a time period and a window, and is it closed or open, and what's going on, and has it sold or not sold? I mean, it's effectively options trading, right? So
it is.
So you don't report anything until it's actually realized is, step one. And then, especially with futures trading, you might have something called a straddle as well, which I don't know that I could actually explain well verbally.
I can't either.
Copies of, the very long story short is always work with a qualified professional who specializes in whatever you're doing, right? So with straddles, with futures, make sure that you're asking. I mean, that's actually an excellent question. If you're trading in futures and you go to your CPA and you say, so I read about this thing called a straddle. What's a straddle? And they look at you with a complete blank face. Maybe it's time to find somebody who knows what that is. So, yeah.
Well, and then that's what I told her. I said, I'm not sure if you're familiar with the name with futures contracts. His name's Ken Roberts. Okay. Big guy in the futures industry, huge in the 90s. I chat with him every 2 weeks. And that's where he explained straddles. He's like, I had a broker to turn from stocks to futures, this and that was working on my team. And he said, the way he explains it is you have a stick on your finger. And on one end is a pile of shit, and on the other one's another pile of shit. And you hope it balances. But I lost it like you. I'm like,
there you go.
That's a good analogy.
Yeah.
Hopefully it balances. If not, well, we're in double shit.
Yay. I love it.
But, and that's where I told him, I said, what I've been doing on paper trade accounts is selling options, very short dated ones. He said, well, pretty much you're going to lose 40% of whatever you make. So if you made $100, you only really get to keep 60. He's like, but you're in California, so you probably lost more like 50% of whatever you made.
So welcome to the California taxes. Mm-hmm. Yep. Very exciting.
I was like, it's that bad? He's like, yeah, you're better off losing money in California at this point. He's like, that's why I moved to Oregon, so I didn't get taxed on that stuff.
Yes.
I had a joke with him. I'm like, oh, okay. So when I get to that point, I'm making a lot of money. Do I just need it? What state do you recommend? He's like, cool, go to Oregon, but in the middle of nowhere because the liberals are crazy in Portland.
And there we go.
And I was like, oh, okay. I don't really care about that stuff, but all right. But so then let's just, for the for-profit part aspect of the LLC, and I got you only an hour, right?
Yes.
Do you need to leave early?
I'm kind of dying. I'm sorry. I think this was, tried to do it before 9:15, but I think it's going to kill me, I think is the point.
No, then it's all good. I will just one more question for the for-profit start, and then we'll get going. Is let's say for the investor part, we work up everything, but I start going out of states for properties. Okay. Is there a specific strategy I should know about if I get into that?
Nope. Just make sure that your LLC is formed in the state where the property is. So if you've got a Texas property, it should be a Texas LLC.
Okay. Wonderful. Then thank you for your time and wisdom. I would love to have you on in the future.
Oh, you're a sweetheart. Well, I'd love to come back after October 15th. We'll chat about it.
Perfect. So then 3 questions, really simple. Okay. Other than work, what have you been doing to keep yourself busy during these COVID times?
Tax CPA, there is nothing outside of work at the moment. Work, and sleep, I suppose. Sleep. I do like to swim. So I've been very lucky to be able to go swimming. So.
Perfect.
Yes.
Okay. Then someone that's inspired by you that wants to start down a similar path, what are some tips, tricks, or advice you give them to start down that?
What I do is a very two-sided coin, right? It's extremely stressful. You are literally changing people's lives, which is fantastic, but you better be Johnny on the spot with those numbers, because if you're wrong, you can literally mess someone up for life. So be prepared for stress and for sleepless nights from that standpoint. So you better love what you do. So.
Well, or have an overarching mission like you did.
Very true. Yes. Very clear goal. That is true. Yes.
Then where can everyone contact you at? They're like, okay, she helped Josh out. I want her help.
The easiest place to find us is Tax Goddess, TaxGoddess.com. So taxgoddess.com.
Perfect. Love it. Yeah. I want to give you some time. I'm watching you shift over there.
Thank you.
All right. Have a safe and wonderful day. And looking forward to talking to you in the future.
You too. You have a great day. I'll talk to you later.
Bye-bye.
Well, congratulations. You made it to the end. You're an awesome person. Not many make it here. So, being the awesome person that you are, can you do me one more awesome favor? Can you rate and review this on whatever podcast services you're using? If you do it on Apple, and you leave an actual written review, I have a thing on my website. I will take your written review and post it for all to see. Congratulations, you're permanently sealed on my site. Otherwise, I am trying to do YouTube more and live streaming. I will try to put as many of the YouTube links in the description of the show as I can. So give your boy some extra help over on YouTube. Watch my videos. I just mute it and change the channel. Change the window or something. But yeah, that's it. Thank you for being awesome, and see you next time.